Good afternoon, traders, and welcome back to today's daily analysis. Starting with the US dollar index, saw a slight rise as the investors shifted their funds for the US dollar amid the escalating tensions in the Middle East. The recent comments from the Fed spokesperson aligned with the market expectations for gradual to no rate cuts this year. If Donald Trump continues to lead in the polls, the dollar rebound could gain momentum. Last week, the US dollar strengthened for the third consecutive week, reaching a key level of 103.80, the 200-day moving average, for the first time since summer. The dollar rise began after Fed's unexpected 50 basis point rate cuts in September 18, supported by strong US economic performance, a cooling labor market, and the speculation about the smaller rate cut next month. As the dollar index continued to rise, the next target is the October high of 103.87. A break above this level could lead to a test of the psychological 104 level, with further potential gains to 104.72 and the weekly high of 104.79. However, the year to date low of 100.15 from September 27 still offers a strong support. If the index faces selling pressure, again, watch for the support levels at 103 and 103 and 102.88. And then for the WTI crude oil, prices rebound to nearly $70 after the People's Bank of China cut the loan rates, with Iran's oil and nuclear facilities expected to be safe from Israeli attacks. Investors are looking for new insights on the oil demand from the S&P Global Purchasing Managers Index. If the tensions from the Middle East doesn't escalate again, the oil prices may continue to fall due to the weak data demand. Last week, the oil prices dropped sharply after reports that the indicated Israel would not target the Iran's oil facilities, reducing fears of market disruptions. Since Monday, the oil prices have fallen about 8%, reaching a 3-week low of $68.15. Earlier in October, the prices rose quickly but faced resistance at the 200-day moving average of $77.12. The outlook for WTI crude oil remains bearish, with resistance at the 50-week moving average of 76.23 and the 200-week moving average of $78.98. The key support levels are at 68.05 and $66.65. On the upside, $70 is the first key resistance level. Breaking above it could lead to further gains towards 71.11 and $71.34. And lastly, for the gold prices hit a record high of $2,740 but have since narrowed gains, currently hovering around $2,720 per ounce. The recovery in US dollar demand and rising treasury yields are putting pressure on the safe haven metals. Despite this, the ongoing geopolitical tensions in the Middle East, uncertainties around the US election, and expectations of a more relaxed monetary policy from the Fed Reserve have boosted the gold prices. The escalation of the conflict, particularly Hezbollah announcement to intensify the war with Israel, has prompted investors to flock to gold. However, China's economic downturn could negatively impact the gold's demand, as it's the world's largest gold consumer. Technically, the gold's 14-day RSI is above 70, indicating it may be overbought. Resistance levels are at 2,800 and $2,850, while support levels are at 2,700, 2675, 2660, and 2615. And that is all for today's daily analysis. Thank you for watching and have a nice day.